Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Jackie Muick. I am the Advocacy and Communications Administrator for the Maryland Realtors. I want to welcome you to your home buying keys. Assembled tonight, we have experts in the industry, including Susan Parks, a realtor with Caldwell Baker Premier, Ricardo Silva, a lender with Fairway Independent Mortgage, and Jim Hall with Freddie Mac. Our friends, unfortunately, from the Maryland Department of Housing and Community Development could not join us today, but we'll still be sharing the amazing programs available, and they will be CC'd in the email I will be sending out to everyone after the webinar if you have any questions for them, along with our other presenters this evening. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and be sent out to all attendees in the next 2 business days in that email that I've already mentioned. We encourage your questions and we're looking forward to answering them. Please post all your questions in the Q&A box at the bottom of your Zoom screen. That is how we'll be getting them and that's how we'll be answering them. And with that, I'll turn it over to Susan.
Thank you. Thank you, Jackie. Am I sharing? I guess I'm sharing. Okay.
I'm not seeing anything just yet.
All right.
There we go.
My question was if am I sharing it, my slides, or are you sharing them?
Oh,
Sorry.
sorry. Yes.
No worries. So I just wanted to go over, being as you're all first-time home buyers, what to expect, when to expect it, how the process works with buying a house. Um, and this is me, this is my information. I'll have it at the end as well. Um, So, and this is the, if you're within 3 to 12 months of purchasing, what you should do, check your credit report, please. I have a website here, www.annualcreditreport.com. That is a free government-sponsored website where you can check all three of the credit repositories annually, to make sure that there's not somebody else's information on it, that there's not things on it that, wait, I took care of that. So like make sure you look at all of that, to make sure that everything's accurate. I would especially pay attention to it if you happen to have an exceedingly common name. Like if you're, John Johnson the third, you might have a higher chance of having someone else's credit information on your credit report. Um, Possibly even the John Johnson the second or junior that you're named after, right? Please make sure you look at like paying off debt or at least paying it down. If you can reduce the utilization of on your credit cards to 30% of your limit or less, it will help your credit score. But don't close those accounts that are long standing because that's going to hurt your credit score. So just FYI. Um, it's kind of one of those simultaneous things you should do is pay off debt, but also save for down payment and closing costs. How much you need depends upon what kind of loan program you go to, and Ricardo will be talking more about the various loan programs and the help you can get from Maryland Mortgage Program. But look at least 3% of your sales price for closing costs and somewhere between 3 and 5% at least for down payment, unless you're getting a zero down loan. And then talk to your lenders. Call Ricardo, call that lender that your friend used. Make sure that you're talking to a couple of lenders so that you get your best deal, right? You want to make sure that you're getting the best interest rates, the lowest fees you can get. Because if you're going to shop 6 stores to buy a TV, you should talk to at least 2 or 3 lenders before you buy it, before you buy a loan. Same thing for realtors. I would love to have you call me, but I also would like you to call other people, right? You want to make sure that you're comfortable with us and we're comfortable with you. You want to set your expectations. How do you want to be communicated with? Would you prefer email? Would you prefer text messages? Leave messages on your phone, through Facebook? How do you want to be contacted? And then what are your wants and needs? What area are you looking in? What's your price range? How many bedrooms and bathrooms do you want? What are you gotta have in a house and what, gee, it would be great to have in a house, right? You need two bathrooms, but gee, it would be great if we had three, right? We would love to have a garage, but we would at least like a carport to keep our cars out of the weather. Things that for you guys to think about. When you talk to your realtor, though, you should be talking about a buyer brokerage agreement. This is when you hire a realtor to represent you, right? Your realtor should be able to discuss brokerage with you, to discuss um, how they get paid and what they can do for you, right? We want you to be protected, and your most protected place is with a written buyer brokerage agreement. It's going to spell out the duties and obligations of each side. And it's going to be an exclusive relationship. We'll be going steady, right? Because I'm not going to, you're not going to see any other realtors. There's going to be an expiration date and there'll be cancellation terms. If we decide that we're not getting along, we can cancel this agreement. No harm, no foul, right? It also has to have an agreement to pay the commission if the seller is not paying it, because that's something we have to negotiate with the seller now. Okay. Once you've gotten all of these things together, you've spoken to lenders, you've spoken to realtors, you know what you want. Now we search. Um, as soon as you talk to lenders, as soon as you talk to realtors and lenders and you get a price range, your realtor is going to start sending you properties through the multiple listing system or through their website. I like to set up my buyers with an automatic search, and it's easily changed. If you're like, you know what, I want to include this area now, I want to raise the price range a little bit, it's easy to change that, but it's going to come directly to your email inbox as often as you want them. You want them daily, you want them as soon as they come out, which might mean multiple emails in a day. You let me know, or whatever realtor you pick, and you get it. And this is your most up-to-date listings. Um, and you'll get a portal, which you can do your own searches on. You can also let the realtor know which ones you loved, which ones you liked, which ones you absolutely despised. And you never want to have anything in that neighborhood ever again, right? And once you have some favorites, we go look. We set up a time, we set up a date, we go and look at properties. And it depends on your market conditions, but in a really tough market where properties are flying off the market, you can expect to take several months to find the house that you want to buy, right? If you've got a lot of choice, you might be able to find the one you like pretty quickly. If you don't have a lot of choice and you're waiting for more things to hit the market, it can take a longer time. So, what happens when you find the one? You've walked into this house and went, "Oh yeah, this is it. This is exactly what I wanted." Now you have to sit down with your realtor and write the offer. We're gonna prepare a CMA for you, which is a competitive market analysis, which lets you know what other houses have sold in the area and what kind of price ranges they were in, whether or not they were paying closing help, whether or not they were paying realtor fees, and they can prepare you for how you can prepare your offer. I'm going to make sure I talk to the listing agent, whichever realtor you pick should. Talk to the listing agent, make sure there aren't any other offers on the property, or if there are, make sure to tell you, hey, there are other offers on the property. We're in competition, so we got to make a really good offer to stand out. And we also want to know, hey, is the seller compensating the buyer's broker so you don't have to? These are really important pieces of information to help you make your decision. We call them material facts. So once you've decided how you want to make your offer, the realtor writes it all down, you sign that offer, and we send that with a copy of the letter from Ricardo or whomever you choose as your lender and your earnest money information. That goes to the seller's agent. The seller's agent presents the offers to the seller, and they've got three choices when they receive your offer. They can, if it's perfect, it's exactly what they wanted, they can accept it, right? Like it's written in, whoo, you're under contract. They can say that is a ridiculous offer. I never want to see anything from these people again and reject your offer. Or they can say this one's close, but not perfect. Here's what I'd like instead, which is called a counteroffer. Um, Counteroffer is going to change a term, at least one, possibly two or three. Things like the price, the closing date, the financial assistance. And then it comes back to the buyer for their decision. And they have the same three choices: accept it, reject it, counter back, right? They accept your offer. Woo! Part two of your home search is now complete. Moving on to part three. That's where the paperwork comes in. So we have to make a lot of phone calls. We have deadlines in the contract where if you want a home inspection, you've got to get it done within a certain number of days. You have a certain number of days to talk to your lender to make the formal loan application. Um, we've got settlement to set up. We've got to pick a title company. And we have to keep these deadlines. Missing any deadline is technically a breach of the contract. Okay. Um, and how long does it take to go from we have a contract and now we're signing papers? It depends on a couple of things. Some of it is your loan, and some of it is what you and the seller agree to and what you need. It can be as little as 3 weeks, but it could take as long as 2 months, depending upon things like that. There are certain circumstances, like if you're buying a house that's a short sale, which can make it take a lot longer. But somewhere between 3 weeks and 2 months is pretty typical. So, like I said, you've spoken to a lender, you've given them their information. They're going to need a lot of updated copies. They're going to order their appraisal. They're going to make sure you have homeowners insurance, right? We have a home inspection. They're going to check over the house, make sure it's all in good order. That could mean, hey, um, we have things that need to be fixed, right? We can use that report to ask the seller to make repairs. Title company does all of the behind the scenes work to make sure that the title's good, seller's loan is paid off, and you have your closing costs. And now on settlement day, everything's ready to go. You just need to sign. You're going to make sure that the money is in the title company with the title company, the loan is all together, and we do a walkthrough to make sure everything's done. You need photo ID. You need to do your finger limbering exercises to make sure you're ready to sign because there's a lot of paperwork. And then you can enjoy your new house. So that's all my contact information again. Jackie, we have questions?
I'm not seeing any questions currently in the chat. Please, if you have any questions for Susan, put them in there now. But one of the things I wanted to ask you, Susan,
Yes.
was I know a lot of buyers can be really frustrated that sometimes they make an offer on a home and it doesn't get accepted. Then they have to restart their search, keep going and looking. And what would you share as advice for potential buyers who are looking at a market where they might have to go through that and go through multiple offers that don't get accepted?
It is very frustrating. Um, there's a couple of things that you can do to make your offer more likely to be accepted. Um, One is, to offer them more money. That's always a winner. Um, Ask for less closing. That's always a winner. But another thing you can do is to make it more likely that they would be willing to do both of those things is to look at houses that have maybe been on the market a little while. Houses are inventory is going up a little, but houses are still getting off the market in just a couple of days to like a week, two tops. If it's been on the market for more than 2 weeks, that seller might be willing to talk about negotiations, right? Um, but one of the things I always recommend, the best thing you can do is be pre-approved for your loan, because that's first step. Be pre-approved.
Awesome. Thank you so much, Susan. I don't have any other questions for you currently, and I'm not seeing any in the chat. Susan, unfortunately, is so wonderful that she has a good class to go teach. So if you have, oh, I do have one.
Uh,
Do you pre-approve MPDU buyers?
MPDU. Well, that would be maybe a question for
I
Ricardo.
think, yeah, we're gonna hold on to that one for later. Um, but Susan, I will let you go to your class. If we have any other questions for Susan after the fact, please go ahead, put that in the Q&A box. I will send them to Susan after this webinar, and she will get me answers back to put in that email I'll send out to everyone with the recording and everything else. So if you think of them after Susan's gone, you're like, oh, drat, just go ahead and send it in, and we'll get that information for you after the fact. But thank you so much, Susan.
No problem. And you guys have a great rest of your seminar and a great rest of your day. And I leaving you in very, very good hands.
All right, and with that, we're going to pass it over to Ricardo.
Oh yeah.
Stop
Hey, good
share.
evening, everyone. All right, let me try to share my screen. Give me 1 second, everybody. All right. All right. Okay. Hold on. All right. Let me know if you guys can see my screen. Can you guys see my screen all right?
No, not yet.
All right, here it comes. All right. What about now?
There it is.
Oh yeah, that's me. All right, cool. Okay, hold on. I'm getting there. I'm getting there. Show webinar. Okay. All right, I'm going to start clicking. Hey, everybody. Look, my name is Ricardo Silva. I am a loan officer with Fairway Independent Mortgage. Um, Happy to be on this call. Thank you, Jackie, and everybody for allowing me to be on this call. And I'm here to answer, well, provide some information and hopefully answer as many questions as possible because I know that sometimes this process can be very overwhelming. My job is to uncover any myths and hopefully demystify any things that happen here. So let's go, y'all. All right, let's see if I can do this right now. All right, here we go. So can you see this? Buying a home can feel confusing, overwhelming, expensive, and out of reach. All right, and look, just y'all, you are not alone. The in the MPDU comment, yes, I am able to pre-approve individuals that are using that program. But look, y'all, this can seem very overwhelming. So if you have questions, just know that you are not alone. Even if you bought a home before, this can be confusing for you as well. And my hope is that during this process, we can at least get a start. And then if we do connect after this, then we would at least sit down for 30 minutes so we can have a conversation about what the process looks like. So let's do it. All right. So who's in the house? All right. Who's in the house? Would love to for anybody to put some stuff in the chat. What's your name? If you don't feel comfortable saying your name, that's okay. Where you from? What brought you here today? I just want to know who is here, all right, and who I'm talking to. All right, are you looking to buy in Baltimore City? You looking to buy in PG County, DC, Pennsylvania? Would love to know who is here. All right, let me keep going. All right, steps to home ownership. All right, getting pre-approved. All right, getting pre-approved is probably the most important thing that you guys can do. And the most important thing that I can do, yes, Ricardo Silva would love to give you the lowest interest rate. I would love to give you a 0% interest rate, right? A loan with no interest rate. Yes, I would love to give you the most closing costs. Yes, I would love to do that. But the most important thing that a lender can do is pre-approve you correctly. I got a phone call today Like somebody blasted my phone today. I've never had this, well, I don't know this phone number. And I answer it. I thought it was like, how you get spammed. I answer it and it's like, hey, I got your phone number from a former client and I need your help. Okay, yeah, I would love to help. All right. I'm getting ready to settle in 2 weeks, and my lender just told me that I need to put 10% down. That's rough. That's rough. And she said, and the buyer said to me, I think that the lender's being greedy because they're asking for so much money. I said, no, no, no. That lender is not being greedy. That lender made an error. All right. And it's not that we don't all make errors. We all make errors. But my number one job for you guys is to tell you what your monthly payment is and what your out of pocket is. And if I can do that and you feel comfortable with that, then we're rolling. All right. But I should not tell you after you done paid for an appraisal, after you done told your family that you're moving, that hey, you're not putting 3.5% down. You got to put 10% down. That's rough. All right. So pre-approval. All right. You cannot, well, I would not submit an offer. I don't think a seller would take you serious if you do not have proof of funds. All right. Proof of funds is going to be either a check saying that you have the assets to purchase a home for $400,000 or $300,000, or your other way of showing proof of funds is going to be to obtain a pre-approval letter from a credible lender. That's your proof of funds. So I would not submit an offer without you having proof of funds. You can do that if you like, but your real estate agent probably will tell you like, hey, look, it's not the best idea. All right. The point of a pre-approval is for you to understand what your price point is, where you should be shopping. You should be shopping for $500,000. You should be shopping for $400,000. You may be approved for $600,000, but my question for you is, what do you want your monthly payment to be? If you tell me that you want your monthly payment to be $2,000, and you tell me that you want to buy a home for $500,000, the only way that aligns is if you're putting probably 50% down. All right. So we got to have a conversation about, hey, look, this is what you're pre-approved for. You can go this high, but what do you want your monthly payment to be? All right. And the interest rates. Interest rates today are in the high fives and sixes. All right. An interest rate between the five and the six is not going to reduce your monthly payment by over $1,500. So we need to have a real conversation about, hey, this is where you should shop at. This is what your monthly payment looks like. Here's what your estimated out of pocket looks like. It's really, really, that's the best thing that I can do for you is to make sure that I pre-approve you correctly and share any programs that you're eligible for. All right, let's keep going. All right, what does pre-approval look like? All right, this is what it looks like. It is me documenting your income, me documenting your credit or your debt, me documenting your assets. If I do not document that, if a lender does not document that, you are not pre-approved. You should not submit an offer with any lender if you have not provided this information. I need a credit report. I need to document your last 2 years of income, and I need to document your assets. If you've not done this, you are not pre-approved. I would not want to, as a lender, as a loan officer, I'm not the person who denies or approves your financing. An underwriter does, somebody that you will never meet. All right, you'll never meet, you never know who they are. But the underwriter evaluates risk. Did this loan officer document the buyer's profile according to an FHA loan or a conventional loan? Yes, okay, approved. No, uh-oh. All right, there's a problem. All right, so income. I need to, if you're self-employed, I need to document your last 2 years of tax returns. If you are an hourly employee, meaning that you receive, I don't know, 20 hours, or what's it called? $20 per hour, and you work 40 hours a week. I need to document your last 2 years of receipt of pay. I need to document the last pay stub that you received in 2024, the last pay stub that you received in 2023, and your year-to-date pay stub that needs to be averaged. All right. If you're a salary employee, I need 3 pay stubs. All right, to prove that. Your debt. All right. You can't just send me a credit report from annualcreditreport.com or Credit Karma. I need a mortgage credit report. All right. And I do a soft pull. So a soft pull is different from a hard pull. A hard pull is going to be a ding on your credit report. It's only going to drop your credit score by maybe 3 points. That's okay. 3 points is not going to make or break your approval amount. All right. But a soft credit pull is me obtaining your credit report. There's no impact on your score. You wouldn't even know I pulled your credit unless I told you. All right. That allows me to be able to evaluate your monthly debt. You are pre-approved not on your credit. You are pre-approved based on your debt divided by your income. That's called your debt to income ratio. All right. And then your assets. All right. You can't just pull money out your pocket. You can't just pull money, out of your sofa. I need to document where the money's coming from if you are pulling money out of pocket, especially your earnest money deposit. There's a lot of folks that I work with that use the Maryland Mortgage Program, which is a phenomenal program, that only have to bring their earnest money deposit to closing. All right. All right. Well, I'm sorry, only have to submit their earnest money deposit, and then after that, that's done. All right. There's a lady that I worked with last week. She was able to, she used the Maryland Mortgage Program in Montgomery County that gives you $25,000. She was able to put $3,000 down for her earnest money deposit. And she got that money back at closing. That's a true purchase with no money out of pocket. All right. But I need to be able to document your income. I need to be able to document your assets. I need to be able to document your debt. All right, that's really important. If this has not been completed, you are not pre-approved. I would not submit an offer with any lender if this has not happened. All right. And feel free to ask any questions. All right, here we go. Down payments. All right, down payment. Here we go. So, a lot of people think that you have to put 20% down. You do not. I just shared with you a young lady that I helped buy her home. She put 0% down. All right. There's a FHA loan, there's a conventional loan, there's a VA loan, and USDA loans. There's other kind of loans as well that are called non-qualifying mortgages where you can basically, I'm not qualifying you the traditional way. There's DSCR, which is a investment property loan. There's a bank statement loan, but majority of the people get FHA, conventional, and VA loans. FHA, you got to put 3.5% down. All right. Yes, you do have to put 3.5% down. That can come from anything or anybody but the seller. The seller cannot pay for your down payment. It can come from the Maryland Mortgage Program. It can come from your assets that you have. It can come from a gift. It can come from a Baltimore City program that you have to put 3.5% down. Now, that doesn't have to come from you, but you have to put it down. Conventional loans, if you are a first-time home buyer, meaning that you have not owned a home within the past 3 years, you can put 3% down. Now, what is the definition of a first-time home buyer or owning a home? You cannot be on the deed of any home. You cannot be on the title of any home. You cannot own any land. You cannot be on anyone's mortgage. If you have those things, and you are on any of those things I just mentioned, you are not a first-time home buyer. If you're not a first-time home buyer, you can still use an FHA loan. If you're not a first-time home buyer, you can use a conventional loan, but you have to put 5% down. All right, for our veterans, all right, people who served 90 days of active duty, or somebody who is a reservist who served 6 years. All right, you gotta go. We gotta go. All right.
You can finish up that thought. We have a few questions stacking up for you.
Oh yeah, come on, let's do it. All right, so you can buy so veterans for VA loans. It can only be a veteran and or their spouse. It cannot be granddad and their granddaughter. It cannot be granddad's giving the money to the granddaughter. It has to be a veteran and or their spouse. So hopefully I can answer these. Go ahead. We got a Q&A.
Yeah, great. So,
Yeah.
real quick before we go on to the new ones, can you explain a little bit for anyone who's unsure what an MPDU buyer or a loan would be?
Yeah, for sure. So it's a program in Montgomery County. All right. It is income. Hold on. I'm sorry. I'm trying to get this thing. I'm sorry. All right, I'm just going to answer it. So it is a program in PG County that allows you to be able to purchase a home and get a significant down payment. It's an awesome program. There are income limits, but there's a really, really good program for our first-time home buyers. Um, I can see the
Awesome.
chat now. You want me to answer these questions?
Yeah, yeah, you're welcome to
Yeah.
go ahead.
All right, here we go. So, Ms. Gibbons, when it comes to income, what if you recently changed jobs in the same industry? All right, perfect. This is a great question. This is a common question. All right, all I need to do is document that you work somewhere for 2 years. Now, how your income is calculated may be different, but all I need to do is document that you work somewhere for 2 years. Even if you had a gap of employment, let's say that you didn't work in 2024, that's okay. All right, if you work this year, I need to document that you worked at least 2 years or you have some type of certification of where you work right now. So yes, ma'am, Miss Gibbons, you are able to. I think I lost that. All right, hold on. Okay, Silva, you saying if I don't have 2 years of work? Yes, no, I'm not saying that. I'm not saying that if you don't have 2 years of work, you cannot buy a jet. You can. Yep. Okay. Yeah, you can buy a home with less than 2 years of work. Here's a caveat here. The rule is I need to document 2 years of work history, or you need to have a certification or some type of diploma, maybe graduated from high school, I mean from college, showing that you got a degree or certification in the job that you are working right now, and then I can use that income. But in general, it's 2 years of employment on a non-qualifying loan. Yeah, all right, here we go. Non-qualifying loan. Yes, the interest rate is higher. Is it much higher? No, but the interest rate is higher because it's more risk. I'm not documenting your W-2s or your pay stubs. I'm using the bank statement loan, or I'm documenting the rent. All right, so yes, the interest rate is higher. It's not much higher, but it is higher. Miss Gloria, a VA loan. Um, what a if there's a specific question I can answer, but I think a VA loan is a phenomenal program for veterans that everybody should take advantage of. It's not just about the purchase. Yes, you can buy a home with a VA loan and put no money down, but the sweeter part is after 210 days, you can refinance, and I don't need to document your credit. Well, I need to document your credit. I don't need to document your assets. I don't need to verify your employee. It's called a VA Streamline. Take a look at that. Yes, what will be considered assets? All right. Assets will be considered money in the bank, money in your retirement account. It would be money in an investment account, something that I can document. So just having money in the bank, or do we need to own something else? Nope, it's just money. It's liquid assets. That's what they call it. Liquid assets is like cash. Um, yeah, Destiny, if you were looking to buy a home in 3 months, I would apply now. All right. Other statements. All right. I think that anonymous attendee, hey, I would like for you to take my email address so that I can answer this question a little bit more thoroughly. But yes, there are other ways that there's a bank statement loan, there's a 1099 loan, there's a profit and loss loan, there's an investor loan. I don't know. I can go deeper into that, but I want to make sure that we maximize everyone's time. But please email me if there's something that you would like to do. I'll be more than happy to be able to answer that question. All right, there we go. Are you a lender in Maryland? Nope. I'm licensed in Pennsylvania, Maryland, West Virginia, DC, and Virginia. All right, email address. Everybody's gonna get the email address. All right. All right, cool. All right. How long is the pre-approval good for? All right, y'all, the pre-approval is good for 120 days. All right, it's 4 months. And how you go about finding a lender if we don't have a strong community ties? There's several ways that you find a lender. You don't need to look any further though. I'm right here. No, I'm kidding. All right, but there's several ways that you find a lender. You can ask a friend that bought a home. Some people go online and try to find a lender. What I would recommend is you work with a lender that knows the local market because he's going to know the local programs. He's going to have ties with the community-based organizations that like MPDU. I know that program, the Maryland Mortgage Program. I know that. I would highly recommend that you connect with a local lender and then pre-approve. Yeah. I hope I answered that question, y'all. All right. Do I got to wrap it up, Jack?
No, that is all
Okay.
good. Thank you so
All
much,
right.
Ricardo. And
Cool.
so, Ricardo, as far as more, will be able to stick around. So if you have more questions
Yeah.
for him coming into these other presentations, feel free to put them in the chat and we'll circle back at the end.
All right, sounds good. I'll go ahead and stop.
Thank you so much.
All right, you're
All
welcome.
right, and now Jim, take it away.
Okay, thank you, Jackie. Great job, Ricardo, and enjoyed your presentation. I'm Jim Hall. I'm a senior affordable lending manager with Freddie Mac, and I'd like to commend Maryland Realtors for, organizing these very educational webinars for the consumers in Maryland every month. They're doing a great service. You're really hearing a lot of great information from subject matter experts like Susan and Ricardo, and this will be, an hour that you really can't put a dollar amount on. It's invaluable for you to get this information. My job at Freddie Mac is to promote our affordable lending programs. Freddie Mac's all about partnerships. We have partnerships with Maryland Realtors, and we are what's called a government-sponsored enterprise, a GSE. We're headquartered in McLean, Virginia. I'm a remote employee. I'm up here in South Jersey, right across the Delaware River from Philadelphia. And Freddie Mac is a mortgage company, but we don't lend directly to the public. So I'm not in competition here with Ricardo. We are in the secondary mortgage market. And what does that mean? It means we create mortgage programs for housing finance agencies like the Maryland Mortgage Program to use, and lenders like Ricardo at Fairway Independent Mortgage to use. And they, offer these programs to you. They do the upfront work. They process the loan, close the loan, and ultimately they sell these loans to Freddie Mac. And what we do is, we pool a bunch of mortgages together and we put them into larger investments on Wall Street. So that gives you a little idea of what Freddie Mac does. But we all have an important part of the affordable ecosystem. So we have a 3% down program, and Ricardo had mentioned he used the word conventional, and that's what Freddie Mac offers: conventional loans. And with the 3% down, that is the most affordable conventional loan in the market. There is the myth that conventional loans require 20% down. We're not here to make you take all your money out of savings and put that as a down payment. 3% down. And we created a program called HFA Advantage. And that's a program that the Maryland Mortgage Program uses. And Ricardo's company, Fairway Independent, is actually our #1 lender in the nation in using that HFA Advantage program. And what it does, gives you that opportunity to put 3% down. It also gives you the opportunity to get reduced mortgage insurance. And also, there's no fees passed to you, the consumer. So we waive those fees, which are called loan level price adjustments. So we're doing everything we can, to make it more affordable for you. And then there's also a major pillar here at Freddie Mac, and that is education. So I'm going to share my screen now, and Jackie's going to send you these slides to you after our webinar today. And what this program is, it's Credit Smart. And this has been around for like 20 years. Freddie Mac created this financial literacy tool to really help consumers better understand the home buying process and also the mortgage application process. This is probably the biggest financial decision you're going to make in your life. So it's really, behooves you to really become educated in the process so you can have a really, really good conversation and dialogue, with your realtor and also your loan originator like Ricardo, because there's really a lot that you really need to know. So after this webinar today, please check out Credit Smart. This is a program for you that doesn't cost you anything. So, you're going to walk away with something tonight that has a lot of value, that that really, didn't cause you to write a check or use your credit card. And this is something that you're going to be able to use during your whole homeownership journey. So it's, it's very user friendly. You can do it, online. There's no office you have to go to. It has videos, quizzes. It has start and pause and resume functionality. It's not something you have to sit down and do it all in one setting. And we broke it into two sides: the financial capability side and the homeownership education side. So the financial capability side, that will help you, to learn how to really, budget, and also, teach you how to save. And again, it's very interactive. You can set up your own dashboard, personalize it, you can track your progress. You can keep a notebook, set goals. And again, it's something that, you can set it up, all on your own. The essential side is for your whole homeownership journey. So this is multiple modules that will, guide you on setting goals and understanding how important to have financial goals, and also how to track and earn what your earnings are and track your spending. Because, Ricardo had mentioned that you qualify with a debt to income ratio. So it's really, really important for you to understand, what your monthly budget is. Also, we want you to understand the importance of credit, building your credit score, eliminating debt. So you do have leftover income, which we call disposable income. And with that disposable income, it's always important to set up a savings account. It's very, very important to have what my father called a rainy day fund. And, my wife and I, we purchased our first home in 1990. And I can remember, my dad saying, Jim, you need that rainy day fund. And I'm like, well, what's that for, Dad? And he said, well, things are going to happen now. You're a homeowner, so you need access to quick cash to take care of things. And, the man was very wise, because, 2 years into our home ownership journey, we came home, and our water heater flooded our basement. And our basement was about 80% finished, so the rugs were ruined and we just had a mess. But I had some quick cash to, take care of the mess while I put in my homeowner's insurance claim. So, it's very important that, you learn how to, save money, because things do happen. And we also want you to understand the importance of preparing and protecting your property. Again, it's important and exciting to buy the house and get that mortgage approved and closed. But this is, you're going to be able to gain equity and wealth through your property. So I want you to understand the importance of making that monthly payment so you can gain that equity. The home buyer use side, now that's for the immediate. This is when, like, you're working, with the application through Ricardo. Okay, this is only 6 modules, and this will, really teach you basically about everything that I spoke about, but really, get you ready to, get to the closing table and close that mortgage and buy that house. The home buyer use side will only take you 2 to 3 hours to complete. And at the end, you do have to pass a test, and you have to achieve 80% or higher. And you get a completion certificate, which is good for a year and meets national industry standards for home ownership education and counseling. And, if I'm a loan originator like Ricardo, and I see that you, my client, passed this test, I know you're serious and it's go time. I have to get that application approved for you and get you to the closing table. So again, this is, valuable information you're going to learn about. Doesn't cost you anything. Like I said, Jackie and Maryland Realtors are going to give you a copy of those slides that I just provided to you. And I really, really recommend that you, go through the course. I think it will help you immensely. Jackie, back to you.
Thank you so much, James. All right. Um, let's get into it with the Maryland Mortgage Program, shall we? So, the Maryland Mortgage Program, maybe you've heard of it, hopefully you've heard of it, but you probably haven't. I hadn't for a long time. But it is a part of the Department of Housing and Community Development. It is specifically the housing finance agency for the state, and it offers Marylanders and future Marylanders like you guys loan and down payment assistance programs, and they are incredible. How do you use it? Quick overview, 5 steps. You find an approved lender. The only way you can get these programs if you work with a lender who has been approved to give Maryland Mortgage Program products, is what they call them, but they're loan and down payment assistance programs. You work with that lender to determine what programs you qualify for. You compare those options, you choose whichever one works best for you, and then your lender will reserve the assistance directly with the Maryland Mortgage Program. So you don't do that step, but you decide with your lender and your lender reserves it. And then at closing, that's the loan program you go with, and you get any benefits that come with it and all of that. It's not crazy complicated. It just requires you to get an approved lender. And good news, Ricardo is an approved lender. Eligibility. There are a few requirements you do have to meet. You have to be a first-time home buyer for some of the programs, not all of them. Some of them you're able to do as a repeat buyer, and we'll get into that in a moment. But some of the better ones, especially the ones with lower interest rates, you have to be a first-time home buyer or qualify for an exception, which we'll get into in a moment. You have to have a valid social security number and be eligible to work in the US. Everyone on the loan must live in the home, and you have to intend to live in the home as your principal residence within 60 days of your closing. You also cannot own any property anywhere at the time of your closing. If you're married or single, that's totally fine either way. And if you're married, both people don't have to actually apply to the program, but both incomes will be factored in to those income limits that we'll talk about shortly. So, what is a first time home buyer for these programs? First time home buyers, someone who has not owned a home anywhere in the past 3 years. So, say you owned a home, maybe you inherited a home or something, you sold it, that was over 3 years ago, you're a first time home buyer again, if you haven't bought anything else since. Or an honorably discharged veteran, but that exception can only be used once. So if you used it already, you cannot use it to be a first-time home buyer again. Or if you are purchasing a home in something called a targeted area. We'll talk about that in a moment. There are some financial requirements as well. There are income and price limits. Income limits for programs are calculated for all household members. So again, if you're married, both people don't have to apply to the program, but if both people are living in the house, their income has to be included in the income limit to be calculated. And these limits are updated semi-annually, so they do change. And they are varied by county, and also by household size, and if you're buying in a targeted area. So there's a few different things that you can look at that will kind of change what that income limit is. If you're buying in a targeted area, the limit might be a little bit higher. If you're buying in one county that's trying to bring people in, it may be a little bit higher as well to try to incentivize people to come in and use those programs. Debt to income ratio, or DTI, is something you may hear tossed around a few times with home buying and with other things as well. But most Maryland mortgage program have DTI restrictions. Smart Buy, which we'll talk about at the end, is a little bit different. But generally, conventional loans require a FICO credit score of 640 or above with a maximum DTI of 50%. FHA, VA, USDA needs to be between, if you have between 640 and 679 for your FICO credit score, you can have a maximum of 45%. But if you have 680 or above for FHA, VA, and USDA, you can get 50% DTI. You can find your DTI, if you don't already know, by taking your total debt, so everything you owe on credit cards, your student loans, any other debts you have, and dividing it by your annual income. That's the percentage that you go with for your DTI. So, targeted area. How do I know if I'm buying in a targeted area? There are some counties that are just fully targeted areas, some counties that might have some areas that are targeted, and some counties that just do not have any targeted areas. So if you're buying anywhere in Allegheny County, Baltimore City, Caroline County, Dorchester, Garrett, Kent, or Somerset, all targeted areas. Places that you'll need to check if it's a targeted area based on your property includes Anne Arundel, Baltimore County, Frederick, Hartford, Montgomery, PG County, Washington, and Wacomico. Any of those other counties, any of these counties listed here in the black section, they are not targeted areas, do not have any targeted areas. So unfortunately, that's not something you'll be able to do. But how do you check for those in the yellow? You'll visit the Maryland Mortgage Program Mapper. You'll type in the address you're interested in buying, and if it says yes, then it qualifies. So let me really quick show you this mapper. This is where you would go. There's a whole state, and it shows you different areas. We'll type in an address. So we'll see, let's type in the Maryland Realtors offices. So it's 200. All right, let's let it do. Come on, you can do it. There we go. Great. And you can see when it's done analyzing, which went faster earlier. That's all right. When it does its job, it will come up and have information here in this sidebar, and it will tell you specifically, it will say priority funding area, and if it says yes, then it is in a targeted area. So, what products do we have? What are the loans? What down payment assistance can you be looking for? There are two different versions of most MMP products. There are MMP First Time Advantage, which is for first time home buyers, including those exceptions that we talked about earlier. And those usually have lower interest rates. These are examples from literally today. So these interest rates are accurate as of today for Maryland Mortgage Program for two of their programs. But they change daily and they publish a sheet on their website daily. The Maryland Mortgage Program Flex is for repeat home buyers or first time buyers. If something works better for them, that is totally fine. And as you can see, so over here we have the Advantage and we have the conventional at the top, which currently today had a 6.375 interest rate, but the Flex had a 6.75 instead of 3.375. So it is a little bit higher for repeat buyers. That's the seat trying to help you as a first time home buyer get in the door and find your first home. So overall, there is the First Time Advantage Direct, which is only a conventional loan. There is no down payment assistance with that, but it's a standard conventional loan through the Maryland Mortgage Program. Generally, they are trying to give you lower interest rates than what a different conventional loan might be able to give you outside of their program. First Time Advantage 6,000. It's called 6,000 because it comes with a $6,000 down payment assistant loan. There is no interest on that $6,000, but it is a loan. You do need to pay it back when you sell or refinance. That also comes with the ability to do something called partner match, where there are some places that you could go to and ask them for money to help. Some employers might do this, like some, I believe teachers might have some programs to help them buy their first homes. And if you are able to get money through those partners, Maryland Mortgage Program will match that money in addition to the $6,000 they give you. So that could be a really great resource for you if you're able to get a partner match, especially. And this is linked. All of these links that are in here, you will be able to get when I send out this PowerPoint. This link for partner match will also tell you who their partners are. So I highly recommend checking that out. First time advantage, there's a 3%, a 4%, and a 5% of that one, and that equals a 3% or 4% or 5% respectively of down payment assistant, and that percentage is of the total first mortgage. So say you put 3% down and you have a 97% of the cost of the home, the price of the home, 3, 4, or 5% of the mortgage, that 97% of the actual cost of the home. So you have to subtract your down payment as down payment assistance. Same thing as the 6,000. There's no interest on it, but you do have to pay it back. Home Start is for borrowers who make less than or equal to 50% of the area median income. And it comes with down payment assistant loan equal to 6% of the total first mortgage. So what I was hearing from our good friends at the Department of Housing and Community Development is that sometimes the 3%, 4%, and 5% and 6% loans, these two on the right, can get you more money than if you do the 6,000 because you're able to get a percentage of your loan. And that can work out really, really well. But the partner match, they wouldn't match it with these two programs on the right, but you would still potentially be able to get money through those other means. So it's worth looking into. Specialty products, the things that are my personal favorite because I think more people need to know about them. There is a product called Smart Buy. They are first-time homebuyers with student loan debt. You have to have at least $1,000 of student loan debt existing, and you have to have a minimum credit score of 720 with a maximum debt to income ratio of 50%. And there are two parts to this loan. There's the conventional loan for up to 97% of the sales price of that home as your mortgage. So that 97% is your mortgage as normal. And then the second part of your loan is a forgivable loan of up to 15% of the purchase price of the home with a maximum payoff of $20,000. So even if your home, the 15% of your home is still more than $20,000, that's the cap for how much you can get. But it must forgive, before I forget, it must forgive the full debt of at least one of the borrowers. So say you and your spouse are buying a home together, or you and a sibling, or you and a friend are buying a home together. It can pay off debt for both of you, but it must fully forgive at least one person's student loan debt. And this is a loan, but is a 0% interest loan with no payments. And it is fully forgivable after 5 years. So every year, another 20% is forgiven. And it does carry a promissory note, and it is an unsecured loan. This also comes with optional third parts as a down payment assistance. So you can combine some of these. You can mix these together and you can get some really great opportunities. M&P Specialty Products Home Ability is for first-time home buyers with disabilities. And this one also has two parts. It is a conventional loan for up to 95% of the cost of the home with interest as listed on the daily interest rate sheet. So we didn't look at it yet, but the interest rate sheet that Maryland Mortgage Program posts every single day, it lists the interest rate. So there is an interest rate for that 95%, but then the down payment assistance is part two, up to 25% of the cost of the home, up to $45,000 with the 0% interest to be paid back when you sell or refinance. So a lot of the similar kind of programs here, just with different qualifications and slightly different terms, but the same overall pattern. Talk to an approved lender and find out which of these programs you qualify for and which of these is going to get you the most money and help you get into a home. We have resources here at the end, and I'm going to show you really quick before we wrap up the interest rate sheet. So you can click on that. You can also just find this on the Maryland Mortgage Program website, which you'll see up here is the mmp.maryland.gov. That will take you right there. Worst case, if you can't find it on their menu or anything, search bar up here will take you to it. Search interest rate. Printable rate sheet is the one you want. And this is their whole all of the interest rates of the programs that they offer. So you can see the MMP Flex over here for repeat or first time. And you can see over here also for first time homebuyers, all of these things. So for example, Maryland Smart Buy over here, you can see that the student loan forgiveness one has a 6.75% interest rate. And the home ability also has the same. And oh, yes, and I did also want to mention there are other programs as well that you may consider. So there's two specialty ones also specifically from Montgomery County. So if that's of interest to you, talk to a lender. They'll be able to help explain questions better than me because they're the professionals in this field. But yeah, for more information, go to their website, look around. They have wonderful resources on there as well. And also talking to an approved lender will answer a lot of your questions. All right, how did I do on time? I did pretty good. Proud of myself. Let's get through some of these questions. Um, I believe we already answered how long is a pre-approval good for? But if not, please feel free to put that back in and we'll go ahead and we'll circle back. Can you stack programs? Ricardo, I'll let you take that one.
Yeah. Um, I'm trying to get to my start video. Yes, you can stack programs. More specifically, if you buy if you're buying in Baltimore City, I would go to baltimorelive.com or baltimorelive.com. You more than likely you can stack the Maryland mortgage program with any city specific program. If you're buying in PG County, you can use the Maryland mortgage program with PG Pathway to Purchase. Yep.
And there are even more like by
Any more?
county programs. There's so many out there that many people don't know about. You can find a lot of that information both with a good lender like Ricardo, but also on
Right.
Maryland Mortgage Program, also on MarylandHomeOwnership.com, where you found this lovely webinar. We do have listed information. So if you're just trying to scroll through and get some quick information about like, what things might be offered, say you're between two counties and you're just kind of poking around, feel free to go there. It's a wonderful page as well.
I can answer these questions. You want me to answer these?
Yeah, sure. Take it away.
Sure. So does Freddie Mac do NPDU loans? Yes. So NPDU is a program, and you finance it with Fannie Mae or Freddie Mac or conventional loans. Yes. Um, how many days does the buyer get to the table? It can be anywhere between 14 days and I don't know, 3 to 6 months. If you're trying to be extremely competitive, I think there was a question asked earlier. How do you get your offer accepted, right? So one way that you can get your offer accepted is to be extremely competitive. There are things called contingencies that are in place so that a buyer like yourself could back out of the contract and get their earnest money deposit back. But one of the things you can do is to try to speed up your closing date. Now, look, you're supposed to close in 30 days, right? And it's a lot. Buying a home is like having a job and homework, all right? So if you want to put yourself through that in 10 days, you can do it, all right? Just know that it's going to be a lot, all right? I usually tell somebody who's buying a home to check their email in the morning, the afternoon, and the evening. But yeah, it's going to be, you can close in, I've closed as fast as 11 days, and a closing took 75 days one time. How would I know which smart buy lender to choose from within the list? You can choose any lender that is approved through the Maryland Mortgage Program. I think you're talking about the list of gold. You can only do smart buy if you're like a gold lender. So you should go, yeah, you should go through that list and find a lender that you feel like is a good match for you. Um, Credit limit, yes. The credit limit for the Home Ability Program is like the Maryland Mortgage Program, which is 640. So there's a minimum. I think the question is, what is the minimum credit score for home disability? It is 640. And can any are there programs that can assist you with your credit? No, but a lender can help you with your credit. A lender can help you with your credit, do a simulator, or you could, you know, download Experian.com or something like that. And then, yeah, so Montgomery County Home Ability. So the Montgomery County loan and Home Ability are two separate programs within the Maryland Mortgage Program. The Montgomery County program provides a buyer up to $25,000 or 40% of their income. And then the Maryland Mortgage Program, Home Ability, gives you up to 45%. So there's two different programs, one specific to Montgomery County, and then another one is if you have a disability or you're a primary caregiver for someone who has a disability. And then no, there's only one to choose from. All right. Among the smart buy list, it's so many. It's Ricardo. All right, Ricardo Silva. All right. But yeah, but you can choose. I would call the lender because, like, look, I would call the lender, have a conversation with them because everybody who does the Maryland Mortgage Program, they pick from the Maryland Mortgage Program rate. All right. So what you need to, there's going to be no difference from the rate. What you need to do is call a lender or schedule a time with a lender and make sure that you feel comfortable with their and confident in their ability to help you out. All right. The worst thing a lender can do is pre-approve you. Yeah. All right.
And I think that can you use both is about the Montgomery County one and the home ability.
Yeah, it'll be one or the other. Yeah.
All right, I'm seeing no other questions, and it is now past 7:30. So the link with the map, gotcha. Okay, the link with the map, I will make sure is working correctly in the PowerPoint before I send it out, but that will be in the PowerPoint that I'll send out. I'll be sending out these slides. So if you have issues with that, then email me and I'll try to figure it out. Okay, cool. Thank you all so much for being here. Give me 1 second because I know I have things I gotta say. If it wants to pull up. Well, I want to say thank you so much, everyone, for being here. I know, Thursday nights are precious. Times outside of working hours are precious. So we appreciate you all for spending yours this evening with us. And there we go. My script came back. Um, as a reminder, our next Your Home Buying Keys webinar, should you wish to attend again, is on November 13th from 6:30 to 7:30, as always. Please share that date with anyone else you may know who would benefit from this information and other future Maryland homebuyers. We would also love any feedback you may be able to give us about this webinar. I'm sharing a link now in the chat to short Google form. Any thoughts you have about how we can make this better or what you thought was helpful from this webinar would be greatly appreciated. And please continue to check out marylandhomeownership.com for more information and resources about home ownership in Maryland. If you have any questions, email us at webinar@mdrealtor.org. Thank you all so much. Have a great evening.
Night, everyone.